All right, and good morning. Today is the beginning of a new day, and upon information and belief, it's actually Thursday, which is cool. So let's get it started. First of all, I don't see any news that I'm really concerned with. Um, a total disaster. Crypto firms face being booted from the UK as a key deadline approaches. Well, yeah, that's a disaster. I mean, again, it's a trading vehicle, not an investment vehicle. And then Russia looks like they're losing ground in the UK, which is scary because when they start losing, they probably are going to reach into their bag of tricks and bring up some nasty um, arsenal, like chemical weapons and stuff like that. So they could escalate this thing, or NATO could get draw the red line there and say, "Yo, you start pumping chemical weapons, we make a move." Or maybe China stops being self-serving and does something for the rest of the world and tells Russia that they'll back away from them if they use chemical weapons. Um, so we'll see how that turns out. I don't think it's going to have too much of an effect on the market. I mean, if they launch chemical weapons, that'll definitely have an effect because it could probably drag NATO into it. Okay, so on the short term, what we're looking at durable goods at 8:30. Durable good orders. It'll show the strength of the economy. And we have initial jobless claims. And those are probably the only two market movers. And as you see, we have Feds getting their 15 minutes of fame in. Bostic, you got to watch that guy. Williams, he's another hawk. So, and that's Friday. Monday, I think. No Feds on Monday, and it looks like next week they calm down and we stop hearing from them. Which is good because I mean they just keep trying to talk the market down, and I mean we can definitely um, be confident that they're going to 2.5%. Yeah, so that's kind of a neutral. So we could be confident that's going to happen. It's just a matter of the tightening that they're going to do that we have to consider. And if you think about it, tighter oil or more expensive oil, foods are more expensive. Um, it's a natural curbing of consumption. So I think that there's going to be a lot of assistance in slowing down inflation in that respect. And then if we can get the supply chains flowing, that's going to work too. Or another phenomenon, we were on demand supply, and that's what the problem is. So when they were building, they would order supplies to build, right? So now we're going to go back to what we used to be, which was um, kind of a stocking supply business model where we're storing material. And you can understand the demand supply end because people kept money in the bank and they had access to the capital. They could put it to work elsewhere instead of it sitting in inventory. And they were using somebody else's money to hold inventory. But now, since inventory is unreliable and you can find that you get into that mix, you're going to find a lot of companies stocking inventory, and the company balance sheets will still look good, right? Because that asset will be on the books, but they won't have the capital for expansion, so that might slow down expansion a little bit, or they could raise money with their inventory as an asset. So might see corporate debt spike a little bit. So anyway, those are the couple of directions that we're looking at. So here's an interesting thing I was looking at also, and I just got to find it. I'm looking at the weeklies, and I don't know, man. What do you think? What do you think? What do you think? The momentum was obviously bearish. We're putting in a low, so I think we're going to challenge this high without making um, a new high and or maybe a lower high. and that would be a good double top because we really only retraced like 23%. And if I was trading this short term, I would look for this bounce and say, if I was looking for the reversal, I would look at the momentum. It's obviously negative. Look for this bounce, and I wouldn't want it to go really past 33 to be a double top. If it went to 38, then I'd make that, say that's a new top, and look for another bounce to make a double top. So this light retracement tells me that's going to try to put in another top. The momentum is telling me that it's not going to make a new high. It's just going to test this area. So that would be a good trend reversal. Once we're up here, I would look for a reversal bar and take an aggressive entry or a conservative entry right here. So, I mean, we're mellowing out, but I don't think that we are done with with the correction. And I don't want to be scary, but I would be happier if we saw 35 honeys. You know, 3,500 correction. I'd say, yo, this market is ready for buying at that point. But I mean, even the 38, a bounce off of 38, I would. That's a lot to get out. That's a lot of cheap stock to get out. So this is a very long-term view. Um, and I wouldn't mind that move down there as long as it's not violent. But anyway, that's my long-term view. Just something I was looking at this morning when I should have been resting. But I don't know, and I just love sitting. Oh, that's not it. Okay, I just like sitting in front of these screens and looking at this shit. Okay, so let's just get to the day, man. This is the futures on the day, and we're up a little bit. This could be a flag. We're going to look at the top, see if we retest the top. Very possible. I'm looking at the 240s, and that's looking a little unfavorable, man. It looks like we could be bullish. So we're bearish on the dailies. Well, you know what? I'm going to have to say neutral on the dailies and bearish on the 240s, and just see how that plays out. The 60, you could be neutral to bullish on the 60. So it's kind of a WTF situation, right? So if we look at the market itself, we're going to open about, let's say, about 17 points up or so. So we're going to open up right about there. S&P on the daily. We could argue this is a flag. I mean, I would rather this bar had retraced. I don't like these sloppy bars and a move up in a flag. I'd rather strong move up, strong move up, strong move up, retrace, and then a break for a flag. Um, some might argue that this was the flag and this is where the flag breaks down. That's not how I see it. I think this is just another move up. So if we break today's high or yesterday's high today, then I think we're looking at a pretty decent move up. We might challenge new highs. So we're up right now. Yeah, I lost it. I think we're up about 20 right now. So we'll have to see how it goes. What's interesting here is you see that the histogram faded a little bit and then got some energy and then faded again. And I don't know, for it to do a reversion again, it's usually uncommon. If it does it and breaks, then that's a lot of energy in the market. So we may consolidate a little bit. If we look at the move, oh, we already fibbed it. We tested the 23. We could come down, probably test the 436 again, and then bounce back up. Ultimately, our goal is about 390 on this thing. 384, 390 if the pullback continues. So we'll have to see at the open, see what the market offers us. The 10-year, I think we could look for a little pullback on the 10-year right here. It looks like it's topping. Look, it's a shooting star and it closed the gap. We'll see where it goes today. Bonds look like they were due for a bounce, so that would so a pullback would be indicative on the 10 year. And Bitcoin, Bitcoin just struggling, man, struggling. I like this though. Yeah, it's having a hard time getting out of this pen, which is how an instrument should behave, right? We want it to move quickly and everything, but this is good, man. It's building consolidation. It's doing the right thing. It's not trading around in an absurd fashion. So good orderly trading, ready for investment, not investment. I'm sorry, ready for trading, using it as a trading vehicle. As far as investment, you got to watch, man. I mean, Europe's already looking to handcuff this thing. So until we know what the governments are going to do with it, with crypto in general, I would restrain from investing. I mean, I don't want the crapshoot to say, "Oh, it's going to go through." I mean, there's nothing that would ensure that for me. So I would avoid it, investment wise. As far as trading, that's it. I'm in it. It's orderly. I'm in it. I'm talking to some people, telling them to get in it, start learning it. It could be a good trading vehicle. And what else are we looking at? We're looking at oh, that's home builders. Yeah, I expect home builders to come down. Is that how I'm playing it? I don't even remember anymore. I like malt beverages. Yeah, I'm looking for this for a trend reversal here. But more importantly, some energy. I'm looking for that double top. I'm going to get involved there, um, probably today, and I'm going to look for it long term to come down. And metals, I'm doing the same thing. Looking for that double top, which this is kind of it. This is a divergence right here. I'm just looking for that one break, and then I'll get involved with a put. I'd rather leave a little bit on the table than make the long move. So that's what I'm holding out on. And all right, so that's it, man. Subscribe, hit the bell, hit the like. Join me at 9:30 and or 9:15. Get in early, and we could wrap a little bit. And we'll see if we can grab some trades, make a little money today. We've had some really good days. Actually, January and February were amazing, but we've managed to pick up a few bucks these past few days. Market's been kind of choppy, a little range bound, hard to trade, but good chats going on. So join me. All right, everybody. Remember, calm and cool. Get your meditation in. You want to be at peace when you trade, and good luck with your trade.